Hey, by the way, remember a couple weeks ago? Told you I got ordered some new sunglasses? Here they are. What do you think?
Yeah, those are pretty nice.
Come on. Come on. You could even look, you could see yourself in my glasses. Check it.
Okay, but okay, they're just mere glasses, JG. What are you gonna do? Walk around with them reversed, going like this? Ooh, how's my hair? So no, seriously.
All right, ladies and gentlemen, welcome to another episode of Rein It In. I think this is number 18, which is really exciting. Patrick, we got 4 sticky notes to talk about today. We're going to talk about the Alberta election, which went better than you expected. We're going to talk about some amazing housing and property data to help investors make decisions. We're going to talk about the Royal LePage report that just came out. We're going to break it down. And then finally, we're going to talk about the GDP surprise and the great rate debate. Get ready because it is Rein It In episode 18.
Great debate.
Do you think people are getting tired of being asked to like and subscribe and comment because every damn YouTube video does it?
Well, they do it for a reason. Is because people get into the video and I'm guilty of it. I'm watching the video and I forget to push like or even subscribe. So these reminders, we get tired of having to give them because we just go like, subscribe. But everybody's enthralled with what we have to say, so they forget, JG. But if you really want to hear about us more, if you want to hear from us, get great content, get some laughs, laugh at us, then you're going to want to like, subscribe, share, do all the things. Comment. Tell us what you like or don't like.
Patrick, Alberta elections. Turns out UCP wins. Why? By the way, why do you call it UCP? We don't call it UCP here in Ontario. We just call it Conservative Party.
Yeah. United Conservative Party. It's about being united. So UCP.
Oh, is that a new thing? Like I'm honestly asking. I don't know. You know me. I don't follow politics. I mean, I'm not dialed in like you are.
I don't know that it's a new thing. I mean, it is relatively new. I don't know when they adopted it, but that was, that's the thing now. So it's the Conservative Party to me. I'm still old school.
Okay. So the blue wins. Are they blue in Alberta too, or do you guys have different color schemes over there? I know Alberta likes to do things a little different.
Okay, as you wear the infamous NDP colors, no, Alberta is mostly blue. Surprisingly, shockingly, weirdly, I guess maybe not. It's to be expected. Edmonton is all 20 ridings NDP. And I'm going, what the heck is going on in Edmonton? But again, government town, so not surprised. Interesting that good that the election went the way it was and the way it did. And I think it's really important, when we look at what's happening politically in Alberta, we have to consider, really what is driving that economy. And the policies that NDP tend to adopt are going to be like federal policies. They follow along with what the Liberal government is doing federally as well as Jagmeet. And they're not independent really that way. So they follow those politics, those policies, which include a lot of taxation. So I'm only going to say that in terms of what's happening in Alberta, the story, aside from what's going on with healthcare, what's going on in the oil industry, what's going on with the expansion of the economy, we have to really consider I think that Alberta is a taxation game. So if we can manage taxes, which Alberta has done pretty good over the years, would have been far worse if we would have went NDP. I think that's a game we got to play.
Patrick, you have a very difficult decision to make now because you made a commitment on this show only a couple weeks ago that if NDP got in, you would sell everything you owned in Alberta. I was waiting to buy some of your properties at a fire sale. Like I got my checkbook ready here. Now, PC won, or the UCP won. But NDP won Edmonton, and you're mostly in Edmonton. So what are you going to do now? You're going to sell it all, or what are you doing?
Well, to be honest with you, I'm going to keep a close eye on it. The good news is that UCP has a majority government, and as many people as say, Danielle Smith is going to be vindictive, and she's going to, kind of really push hard and be bad for Edmonton. That's not how politics work. And any politician, whether it be Danielle Smith or Rachel Notley, any politician, period, their job is to get reelected. She's been, Danielle Smith was elected. Her job now is to get reelected. So this whole story and narrative that they throw out there about her being vindictive would be self-defeating. What she's got to do is go in and prove NDP wrong. She's got to go in with some fantastic policies, some really great initiatives, which I'm confident they'll do. And so at the end of the day, I'm going to be watching it very closely to see just how things unfold.
But I will tell you this, Patrick, you just said that her job's get reelected. Unfortunately, that's what they think their job is. That's not actually their job, but that's what they often think their job is. And that's why they get absolutely nothing done. So Danielle Smith and anybody else who got elected, please get it done. Don't just focus on getting reelected. That's the most important thing.
I think there's a couple of aspects, which is just fiscal responsibility. And when you look at what NDP is built on, these are social programs. I have no issue with that. At the end of the day, when I look at what I expect from a government, from politicians, is that we are paying taxes, and I want the money that I'm paying to them to spend. I want it spent well. I want it to have some thought. I want budgets. I want, cutbacks where cutbacks need to be made in the government, not more bureaucracy, not more administration. We can take that off on a whole tangent about why we're in the position we're in the shortage of housing was because of bureaucracy. We keep throwing layers of bureaucracy in, which seems to drive jobs, but at the end of the day, it's a non-productive scope of work. And that's where I get really kind of fired up about how the UCP kind of philosophy is versus, the NDP philosophy is versus the UCP philosophy.
I had an interesting encounter this week, Patrick. Was it this week or last week? It was in the last week with politics. I'm not big on the politics thing, not like you are. But I was one of the local counselors here reached out to me and wanted to meet with me about some housing developments we're working on. So I thought, yeah, let's do it. So I went and met with this chap, let's call him, and we had a very fascinating debate. Let me tell you, for a little while there, it was going off the rails, but we had a very interesting debate right there on the site because we're building coach homes, and he as a counselor is getting a lot of pushback from people, the NIMBYism. And he happens to live in the community. He lives on the block where I'm building. And let me tell you, he had a lot of things to say. But what was fascinating, and I won't, I'll spare the details of the hour interaction we had. But I'll tell you where it ended. First of all, he invited me to his place for a beer at the end, so it ended well, obviously. But what we ended up discussing on is, and I pointed out to him that he was entirely, not only he, but the entire neighborhood is entirely focused on the 1% chance that it all goes wrong. What if we get the wrong tenant? What if we get a bunch of party animal students in there? What if this happens? And it's like such a narrow margin of, yes, some rentals end up going that way. But I said to him, 99.8% of the time, you don't end up with that. You end up with a good family, a good working couple, someone who needs a home to live in. And this is what that is providing. And, he was very, very focused on that. What if it goes wrong percentage, which is like 1%. And I was able to agree with him. I said, well, what if it goes right? Will you be our advocate? Will you go to the counselor? Will you go to the city and show them how this does work when it goes right? And he committed to doing that. So I'm going to keep this show and everybody in the loop on how that goes, because I'm going to tour him around all of our other developments where it did go right. It wasn't a terrible idea. It turned out really well. It increased property values. It did all the right things so that we can get over this NIMBYism that just continues to happen, because this was just another version of that. And it's funny how, even it happens to everybody, and anyone who's in real estate doing this is going to have to face it. So anyways, it was a fun interaction, Patrick, that ended up going in the right place in the end.
Well, I love that you had that conversation. There's a fundamental Stephen Covey says, seek first to understand and then to be understood. And I think that politicians don't take the time, many don't. And you had a conversation with somebody that you had to kind of beat up a little bit in terms of a debate around, no, you need to listen, you need to see another perspective. I would argue this from this point in that kind of a conversation, which is, here's my track record. I manage over 400 doors or 500 doors, whatever you're up to these days, JG, and I'm in the trenches of rental properties. What's your track record? And then what is the solution for what you're offering in terms of the housing problem? You're talking about specifically in Peterborough, I believe. And when you look at what's going on, you're no different. Peterborough is no different than every other city in this country. When we look at the immigration that's coming in, the people that are living on the street, people are being pushed out. So let's just compare housing solutions, if you will, to the results that these different municipalities are getting, and they're going to lose every single time. So I'm glad you debated it, and I'm glad that you at least opened up to listening to that. Those are the kind of things that this is where leadership gets in the way, because again, they want to try and appease that 1% of squeaky wheels. Not everybody's a NIMBY, but they're the squeakiest wheel, so that's who politicians listen to.
And what's funny, and there are some fascinating things about this conversation. First of all, this counselor is a real estate investor. He owns a couple real estate investments. Interesting, but funny how. And by the way, that he was very, very. The conversation went in the direction of what he was really afraid of was student rentals. That's what he was afraid of. By the way, he really didn't want a bunch of students in there, and then what ended up happening is he's a real estate investor. He rents to that very demographic profile. Like that's who he rents to as students. He told me that himself. I mean, I'm not making this up. He told me he has rentals for students, but he didn't want a student rental in his backyard. So really, Patrick, at the end of the day, it's just another form of NIMBYism. It's like, I can do this elsewhere. It's okay over there. I just don't want it here where I live because of this community, which is just, and we had to have some conversation to get him to understand that. How does that make any sense? And still there was
a little bit of understanding there, Patrick, but I got to tell you
that he was really like, he was pushing his point and he wasn't open to much.
Wow. That's, they shouldn't call it politics in this case. They should call it hypocrites. And that would be more appropriate given this MLA that you were dealing with. That is sad, but it's too common.
Yeah, too common, unfortunately. Anyways, fun, but at the end of the day, I got to hand it to him because he did listen. We had a great conversation. He invited me to his place for a beer, which is great. I couldn't go. I had another meeting, but I will take him up. And I opened up the door. And I think if other real estate investors are listening to this, I opened up the door to let me show you what happens when it goes right. And I'm going to show him this. I'm going to show him various projects we've done in that community, literally within doorsteps, where it's like, look at all the positives, and hopefully he starts to see it a little bit more our way. We'll see.
Fantastic. Good job, JG.
Alberta election politics complete. Okay, next, Patrick, we're going to talk about some housing and property data. We actually have a ton of cool charts and graphs to show today. Let's start with consumer confidence. It has ticked up a little bit, Patrick, and you're a big fan of consumer confidence, as I am, as a leading indicator, because it shows you a little bit of what's to come. What do you read into this? You think it's getting better? It's gone up quite a bit from 47.28% 2 months ago to 49.54%. It's a good tick up.
Well, it's a decent tick up, but it's still, historically very low, which is only to say that people remain nervous. They don't know what's going on. There is a cohort, definitely a financial kind of demographic, if you will, that are really riding the edge, and they have little to be optimistic about. Sadly, I don't know what the actual percentage would be, but let's say that demographic of income level, bottom 30, 35%, maybe even 40%, lower middle, and then down from that, are pretty nervous. And there's certainly a lot of uncertainty about what's going and what's happening into the future. And there's a lot of nervousness in that regard. So when consumer confidence starts to drop, I think it has more impact, to be honest with you, on what inflation will happen with inflation than even an interest rate hike. And we'll talk about interest rates in the rate debate. But having said all of that, consumer confidence means that people are just going to keep their hands in their pocket. They're not going to pull out their wallet. They're going to cut back on some discretionary spending. And that's not good for an economy. That, of course, takes time to happen. But as we see this consumer confidence still remain quite low, has been the concern for quite a long time now. And it's starting to show up.
The supply crunch is interesting, Patrick. We got some new stats on how the supply is getting pinched and the future supply is only going to get worse. We've been talking about this for years, literally. I mean, I feel like a broken record here. And this is one of the greatest things about being a real estate investor is we have a supply issue, and that supply issue ensures that we're going to be definitely, it doesn't ensure, but it definitely helps us real estate investors to be successful because rents are going to continue to increase because there is a lack of supply. Now, everything, and the reason we bring it, this conversation to the show is because with all the stuff that's going on with the governments and the headlines and all that stuff, they're talking about supply. We're adding supply. They're not adding supply. Look at what's happening in the numbers. You could see them, going down and down and down. And look, in 2023, we're going to be at an all-time low soon as it relates to supply. And this, by the way, is directly connected to what I was telling that counselor. This is why there is no supply. When you put up all these barriers to doing development and doing new builds, why would we do that? We're just not going to do it as real estate investors. We're going to move our money somewhere else. That doesn't help anybody.
Well, there's two aspects to it. Number one, the supply issue continues to be an issue. And we've said so many times, something the government puts in all these new initiatives. They have great intentions. Just know that if a government says they're going to solve the problem, it's not going to get solved, certainly anytime soon. That's all, and I'm not going to come off that. And that may sound really, I guess, negative and dark and bitter. And well, it is just frustrating because people buy into this narrative that the government's going to solve this housing problem. They are not going to solve the housing problem, full stop. What will solve the housing problem is the builders and the developers who, if the right initiatives are put in place, can solve it. Government isn't there to do that. The right hand doesn't know what the left hand is doing. The federal government isn't communicating with the provincial or the municipal with the provincials. It's just a total disconnect. And so I won't go down that path too far. Here's the other dark side of this particular conversation, JG, which is builders are cutting back. They're not building as much for all sorts of reasons, not the least of which is rates and lending, and then what they're calling labor shortages. But soon those labor shortages are going to start to dissipate. And here's the thing, is that part of it is going to be the cause is because they're not building. So then, of course, unemployment, there's a good chance that we'll start to see unemployment in the construction sector start to lift a bit. Although right now, if you listen to anybody, it's going, I can't get good skills. Well, that I get it. But that, you look at the lag, we look into the future. That's our job.
Yeah. And you know what, the people who have a hard time hiring, I don't think they're spending enough time and doing a good enough job hiring. Because I put out some ads the other day. I got great candidates. Again, I've constantly been telling you this, Patrick, and I think it's more the same. But that being said, back to the builders for a second. As a builder myself, listen, everything is against the builder right now. Prices are flat. In some markets, they're decreasing or barely increasing. So that's not good. The costs have gone up, not down. So that's not good. And rates are way up. So that's not good. So essentially for a builder, not only is everything compressing in terms of margins as a builder, then try to get your project through the city and through the municipality. That takes longer than it's ever taken. So forget it. It's not a good time for builders right now. And definitely, I agree with you that the governments are not going to be at the source of the fix, but they are the source of the problem, and they have got to get out of the way. But here we are talking about it again, Patrick.
Well, we continue to talk about it. It's one of those things that is always in the, kind of in the world and behind the scenes, a little bit in the headlines. But let's go back to what we talked about, I think, in the last show, which even costs builders 31%. Southern Ontario, 31% of a new build is going to taxes. And that's not including the after-tax dollars that people are spending to buy the house. And then the transfer tax. And it's just shocking that the cost of housing is so much of that onus and responsibility lies again with the government. Yet they're there talking about it's the builders, it is the cost of labor, it's all of, and it's just not true. That drives me crazy.
Immigration set a new record, Patrick, in Q1 of this year. Numbers are really off the charts. Q1 nearly 150,000 new permanent residents. If we kept up this pace, that would be 600,000 new permanent residents, Patrick. That's a massive number.
It is a massive number of permanent residents. And of course, what isn't in that number is the, tens of thousands of international students that are coming in. And of course, the temporary foreign workers is another example of what's coming in. That all translate to an estimate of about 1.5 million, 1.3 million coming into Canada. And what is also really rumbling in behind the scenes is the irresponsible actions of the universities across the country with these international students, because they're opening the doors because what they charge an international student is extreme. They're opening up the doors to international students, but they're taking absolutely no responsibility for supplying housing. So we then have this impact of international students coming in, literally sleeping in, walled off with blankets, bedrooms, paying ridiculous amounts, and a lifestyle and accommodations that aren't even conducive to great study and or living even a mediocre life. Let's face it, this is Canada. We shouldn't be third world standards of living for our international students, given that we're the ones inviting them in.
Now, moving on to housing being back in a seller's market, Patrick, listen, it's been exactly 1 year. I know that this decline in kind of the market shift that's been happening for us real estate investors in the trenches, I don't know about you, Patrick, but it kind of feels like it's been going on forever. It kind of feels like I've been at this, but it's only been 1 year. It was 1 year ago that the market was at its peak and just starting to come down. It was actually March of last year. So we're just 14 months past that point, and we are now back into a seller's market. And this is a Canada-wide statistic. So, and we're big fans of saying there is no such thing as a Canadian real estate market, but it's just interesting to see how most markets are in this seller's market. And we've been telling people, Patrick, all along the way in the last 14 months, this will not last. The market will turn, and it won't be time to go into buying deals in the future if you have good deals today. And for some investors that took us up on it, they were definitely very thankful, because now we're back into a seller's market once again.
Yeah, and I mean, the market is, as a matter of fact, at the time of this recording, we're literally shifting into a different market in terms of supply. New listings are starting to uptick again. Different property types, of course. Some property types are still remaining soft, like that condo market in Toronto, Vancouver. Specific condos, by the way. A lot of builders are pushing hard on new projects to try and get them off the ground, and people aren't buying into it right now. That pre-construction investment is really soft right now. So I think we're starting to see a shift again, because listings are starting to uptick, which is a weird timing, given that this isn't a great time that people are in fact interested in buying. So we'll see where it all goes, but ultimately listings are coming up, sales are starting to shift once again.
Some anecdotal evidence, Patrick. I had a meeting with one of my realtors a couple days ago, and they were rhyming off different properties that I was familiar with, and they were like, listed for $650, sold for $642, listed for $712, sold for $696. List every single one that he named, listed for an amount and sold under that amount, and all within, like, this is obvious. I'm just specifically referring to the Peterborough market now. All within kind of the 25 to 40 day range. So, which, by the way, that's that's the way the market used to be, where you would list for a certain amount and you would get close to that list, maybe a little above, maybe a little below, and you would sell within 20, 30 days. This is back to normal, Patrick, not what we saw. And I think the condo market, I'd have to pull the stats and look at it, but my point to, yes, condos are not moving as fast as they once did, especially in the last little bit, but that doesn't mean the market's broken, is what I'm saying. What I'm saying is we're just a little bit back to what it was like before COVID.
Well, we saw that, 5-year bond shifted again. They continue to increase, which is in fact affecting longer term rates. So we're seeing rates, 5-year rates go up. So I think that, again, that's going to soften that particular segment of the market. When people are going for mortgages, they're looking at a higher rate, and they're still many people are still sitting waiting for rates to come down again.
Interesting that house prices now March of this year and April of this year are the last 2 months, and the prices are on an upswing again. You saw a less than 1% rise in March, and then a 1.6% climb in April. And if you look at this graph here, you can see from April 2022 to February 2023, it was negative every single month. but definitely things looks like the house prices have sprung back to life.
We'll see. It's a little bit early to tell, but there's definitely a shift in the wind, Gigi.
Well, there's two months to speak of. We'll see as things go forward. Now, inflation surprised Patrick, which is going to lead us in a second. I don't want to have the great rate debate yet because that's the last segment of the show. But inflation did surprise with a 4.4% annual number in April instead of 4.3%. So that was a bit of a surprise. We're not going towards 2% now anymore. Now we're going back up. So it's not good from an inflation perspective.
Gigi, you know that I have said all along that interest rates are not going to fix inflation. I still don't believe they are. People are holding out saying there might be a rate increase to kind of quell inflation. And the reality is increasing interest rates won't do anything for inflation right now. Especially given that a big part of inflation is shelter costs, and shelter costs are made up of a big segment of interest cost on mortgages, which then gets passed on to rental costs. So at the end of the day, inflation will not be controlled by an interest rate. Definitely fuel prices are not at the effect of interest rates going up. Certainly it'll slow down an economy because businesses will not borrow money and will not grow their business. I mean, that's certainly an aspect of it. And we're already starting to see that in many surveys of small business owners. They're cutting back in terms of, no, I'm not going to borrow money. I'm not going to put capital costs into the business. I don't have the cash flow. And whatever cash flow I do happen to have, liquidity that I do have, I'm going to sit on it so that I can actually ride out any downturn. And that's what a lot of smart business owners and entrepreneurs are feeling they have to do.
Interesting, Patrick. Interesting. Lots of really good housing and property data there and some cool charts for everyone. So hopefully you've enjoyed that segment. That concludes this sticky note. All right, next let's talk about this Royal LePage report. Patrick, I like when the real estate companies always issue these reports. You always kind of get interesting data out of it, but you always kind of see, you also get their spin on it, right? Because, it's Royal LePage that's putting out this report, and Royal LePage is in the business of selling property. So, I always find the things skew in whatever direction they want it to skew. I'm not saying it's not a good report. It's actually a very good report. We know the people at Royal LePage, they do very, very good work. But a couple of highlights, Patrick, that we want to point out in this report. First and foremost, they're saying 4.4 million Canadians, that's 11% of our population, own an investment property. That seems high to me.
Well, interesting is that when, over the past few years, we've watched these numbers, it doesn't actually seem high to me, given that I actually thought it was higher. Certainly over the past couple of years, there was as high as over 20% of people were buying investment properties over the past couple of years. So I think when you look at the bigger picture, 11% average out, I'm not really surprised by it. I think I believe the number. I think based on what we've seen in the past.
Well, it's interesting because I think it really speaks to the fact that Canadians understand that real estate is a fantastic wealth vehicle. It's a great wealth building vehicle. It's a great vehicle in order to capture some of that growth in the market. A lot of Canadians understand that, obviously. And one thing I do want to find out, Patrick, and it's curious on this one is, what do they consider an investment property? Because I would bet this is anyone who owns more than one property, which means people that own cottages, which are not investments. Let's be very clear about that. Unless you buy a cottage for the distinct purposes of getting an Airbnb in there, if you buy a cottage just in order to have a cottage, that's not an investment. That's a leisure property. But they probably lump those people in to this category, I'd assume, Patrick. I'm assuming that.
Yeah, I don't know. I actually don't know how they kind of differentiate. I mean, to me, it would be smarter if you're an investor. You wouldn't want to call it an investment property if you had a second property that you could refer to as a secondary residence. That would be a smarter move to make. Hence the thought process around property on the lake kind of thing. I don't know how I don't know how they differentiate that. I'm assuming they're going to mortgage brokers or banks or whatever. I mean, that's got to be in those kind of numbers that they're getting that. But at the end of the day, 11% of Canadians are, reaching that point of understanding that to create that financial future that they want, they believe in real estate. And of course, we believe in real estate. We've been talking about it for years. We keep beating that drum, keep moving forward, investing in real estate. even through these times, there's still lots of opportunities.
Interesting that this report came out and said almost 1/3 of these, people who own investment real estate, 1/3 of investors in Canada, it's 31% to be precise, they've considered selling one or more of their investment properties because of the higher lending rates. This is interesting, Patrick. And if this number is a little bit, it's interesting, it's high, and I'm kind of, in my mind, I'll tell you what I'm thinking. I wish a couple of these people would not just consider, but actually do it, so we can get some supply on the market, so we can actually get this market moving a little bit more. But it's, people are considering selling because of the higher lending rates, which I think actually comes back to what you just said, Patrick, which is, in the last couple of years, we've seen reports that have talked about up to 25% of buyers being investors that are buying properties. And I tell you, Patrick, and we warn these people against this, but I've been dealing with lots of them at Vischer Property Group, trying to help them through these situations. But people that bought property, 15, 16, 17 months ago at the tip top of the market, they are struggling with those properties now because they're having a very difficult time cash flow. They're floating these things. They're making bad decisions. And when you're under the gun of financial pressure and you have to generate a certain amount of cash flow, otherwise, you're in a bad financial situation. What that ends up happening is it compounds into bad rental housing provider decisions. You end up putting the wrong tenant in there. You end up not seeking the counsel and advice of property management companies because you're trying to save the 10%. All of this compounds, Patrick. It makes the problem even worse. And I'm helping lots of these people trying to clean up this mess because they bought at the top of the market. So I think that those people that are considering selling, a lot of them are from that perspective.
Let's back up a little bit, JG. And so all of what you said is, really great point. I think there's a couple things. That 11% of investors, they don't, of course, identify some investors as the speculators that they are. So having said that, even the most sophisticated investors got caught a little bit with that shift in interest rates. Let's face it. But let's go back to some of the kind of economics of what we talk about in real estate. And as we look at a cycle, interest rates are an influencer. And in this case, it's a painful influencer for many because of that interest rate hike. However, knowing that this too shall pass. And, you have to look into the future a little bit, knowing that, yes, this is going to be a short term, and that doesn't mean a few months. It could actually be another 18 months. But ultimately, we have to believe strongly, and I do, that just given what's happening with the debt cycle, happening on a kind of a global macro scale, interest rates are going to have to come down. Because here's the real kind of crux of that conversation, JG, is that at the end of the day, our government is huge debt, far greater than the public debt, and they too are paying an increased rate. And so they have to service that debt. And part of our deficit is, in fact, servicing the reason for that deficit. A big part of it is servicing the debt load. So it's all to say this. Yes, it's painful right now. We have to be creative in getting through it. And ultimately, we can see the end result, which is those rates will come back down. That's my kind of thesis.
I mean, listen, interest rates are going to fluctuate. There's no doubt about it. So will they come back down? Yes. But will they come back to where they were at near zero? Absolutely not. So, but a lot of people have that in their head that that's where rates are going, is back to somewhat zero. These rates right now are normal. These are normal rates, Patrick. This back in the day. And when I say back in the day, I'm not talking about very long ago, 2015, 2016, 2017, 2014, 2012, 2010. All the time I bought real estate, these were the rates: 4.5, 5, 5.5 on some B. So it's like they're not that much higher than they always were. So will they come back down a little bit? Yes, but I don't want people thinking, oh, rates are going to come back and you're going to be able to get a mortgage at 1.6% like you could in 2021. That's not happening.
No, I don't see that happening either. And I'm glad that you clarified that. And there is a couple other things around that, JG, which is there's a part of it that we're operating on top of, many investors are operating on top of, and that is the fear of the interest rates spiking even higher. And, as we get into the rate debate shortly, we have to consider that that's what's keeping a number of people on the sidelines is they want to wait to see what is going to happen with the rates. And I think that that's really going to cause some investors to lose some great opportunities.
Definitely recommend, folks, that you read this Royal LePage report. Very fascinating statistics in here. One of them that I just saw again was 51% of investors who currently own an investment property, a residential investment property, 51% are either very likely or somewhat likely to buy another property within the next 5 years. So, interesting. The appetite is still there, is my point, Patrick. And there's no doubt that our economy and the entire system has been through tremendous shocks in the last 3 years. I mean, from COVID to the shutdowns, to the reopenings, to the money flooding the market, to the interest rate hikes. I mean, it seems like every 6 to 8 months, we're going through a major shockwave, and we're all, I'm hoping, this is a hope, that we're almost at the end of these major shockwaves. We'll see which one is the next shockwave as the market kind of just settles down a little bit.
No, it's a good point. And I think that it will start to settle down. But, this goes back to what we've said many times as well, JG, is that for those sitting on the sidelines, continue to look for opportunities, because those speculators that are feeling the stress and the pressure, there'll be some opportunities that if you go looking for them, they're already there, by the way, to actually get in the game.
100%. Okay, Patrick, the great rate debate. Why are we going to do this segment? Well, it's because GDP had a surprise, which is everyone's been talking about how GDP is going to decline, and the first quarter GDP has come out higher than expected. Now, you got to look behind the curtain on that, Patrick. You got to go behind the headline, which you will in a second. But this surprised people, and as a result of that surprise, the very first thing everyone jumped to is, we're going to see another rate hike. And it's coming up, I think, on June 7th, the decision. So now everyone is scared. Shoot, we're going to increase rates again because GDP is doing better than expected. We're going to increase rates, and that's kind of freaking people out.
Yeah, and when we look at GDP number, again, it's a lagging number. And so you have to look behind the curtain of what made up that number. And certainly as positive as GDP was, it was a surprising positive more than, but ultimately it happened primarily in June. Almost all of it, as a matter of fact, was in June. June, wrong month, January, and February, March were pretty flat months. So we have to look at, is the economy actually slowing? But it gives you the impression that it was a good quarter. And ultimately, when you look at the number, it's a good quarter overall, but we started to see the trend down. So we have to look at that. Having said all of that, JG, I'm still looking into those, you look at those leading indicators. I see a slowdown in the economy for sure. When we look at what's happening in manufacturing, in building, we just had that conversation. We can start to see and anticipate a slowdown, but I'm not seeing as many people continue to call recession. I'm still not there. And as you know, I've kind of been a little bit hesitant to say that's where it's going. I'm still not seeing it going there. Really hard given the number of people coming into the country. That in itself supports an economy.
Yeah, it's fascinating, Patrick. And I will tell you this, and this is those are the numbers that Statistics Canada publishes, and that's fantastic, and that's always weighs into my decisions. But I also really I lean pretty heavy on what I'm experiencing in the market because of our businesses, Patrick, and my broad businesses. I mean, I own a marketing company, I own a property management company, I own a property development company, I own a spa. So I actually see a pretty broad sector of the economy in terms of people's discretionary spending in my spa. I see people's, business spending at my marketing company. I see real estate investors and so on and so forth. The point is, I have a pretty interesting view of the economy around me, not across Canada, only where my businesses operate. And I'm telling you, people are scrapping right now, and people are not living and not working on the froth that they did during COVID, meaning they have to work for it. They're out there, they're hustling, they're selling, they're growing, they're scratching in order to make it happen. But I'm not seeing major cuts, man. I'm not seeing people doing any major cuts and saying, cutting big spends, cutting big budgets. But they're saying, listen, we have to tighten our belt a little bit, but we have to work harder. That's kind of what I'm getting from the general sense. And I can feel it where I do business. It's busy. Like there's a lot of people, calls, emails. Like people are really, going back to what it was like pre-COVID. And I don't like to kind of keep referring it back to that. But my point is that stuff that had stopped happening just like touching base with clients, touching base with various business partners, all that is coming back. Hey, let's grab a beer. Hey, let's grab a coffee. Hey, let's talk about a project and let's do people coming up with innovative solutions to their problems. I'm getting a lot of that, and we had lost a lot of that through COVID. So anyways, that's my 2 cents on it.
Yeah, I think it goes back to what we've talked about before, which is, discretionary spending is going to depend on what income level you're at. So we see discretionary spending when you look at your spa, for example. There's a certain financial benchmark that you hit before you're prepared to spend that money on a spa. So you're dealing with that kind of upper 50% of income, whereas below that they're being far more conservative with their spending. And like I've got a high-end retail store, so we're seeing that store do exceptionally well into that income level. So it is, you have to look at it. The disparity between income levels is more, I think, apparent than it's ever been in the past. And that's partially because those in a lower income don't have access to the credit that they had in the past, or they may have access to it, they just can't afford it. What we are starting to see, however, is some credit card debt go up, and the overarching debt or the overall debt isn't continuing to increase, which means people are borrowing to pay. So, it's hard to say where that part of it is going to go, but I think that you're right. Businesses that are being savvy are actually paying attention and being more relational, getting back into the trenches of actually selling, connecting with clients, and grinding it out. It's a much tougher sale than it has been in the past.
Now, this leads us to the question, the great rate debate. What are rates going to do come early June, Patrick? What is your prediction?
Well, the fearless forecast that I put out in a different forum, but in the public, was that they're going to remain the same. I mean, ultimately, I don't know. I really can't second guess Tiff Macklem. Given what they're doing, you look at this positive GDP. They know what's going on behind the scenes. They know that it was just January. We've got low unemployment. We've got inflation, but they have to look at it and go, most of that, or a lot of that inflation number is because of food, for example. You can raise the rate. People aren't going to stop eating. Farmers still have to buy fuel. Oh, by the way, fuel continues to increase in price. Interest rates aren't going to bring that down. We look at the interest portion of shelter costs. That is, you up it up. Okay, go ahead, increase the rate, and then of course we'll see inflation go up again. So it makes no sense to raise it. I know a lot of people are going, we got to slow things down. We got to slow it. I disagree, and I don't think that raising rates is going to change a thing when it comes to inflation. Not now.
This narrative people have bought into that we have to slow things down, I find it quite fascinating. Like who the hell says we have to slow things down, and who the hell believes that shit? I just find it fascinating that people in general want it to slow down. That just makes no sense to me. I'm thinking we got to speed up, not slow down.
Yeah, and I don't know what to say about it. There's, when we've got the unemployment rate is where it's at. Okay, so first and foremost, lots of people are working. That's good. And I get that some of them are working 2 or 3 jobs. Understood. We've got a huge amount of immigration coming in. I've talked about this for 2 years with this immigration coming in. Immigration is going to drive the economy and drive inflation just in that huge amount of people coming into the country and spending money, getting set up, setting up house, doing all the things that they are. And ultimately, that's another part of it. So when we talk about recessions and we need to slow things down and all of the narratives around, that's why we want to increase interest rates. Man, it's hard to see a recession, number one, just given the amount of people coming into this country. That in itself is driving, the economy in many, many ways. Again, I'm just going to go back to what I've said all along. You can increase interest rates, and they might another 0.25%. Some are saying for sure. Some are even saying there may be 0.5%. I don't know the answer to the question anymore, to be quite honest with you. I just know that I don't see it slowing down an economy. You raise it enough, you'll crush the economy. That would be one solution, maybe.
I'm going the opposite way, Patrick, only because I'm a contrarian. And so what I always do, they're going to cut rates. I think they're going to cut rates by a quarter basis point. Get ready for it.
Get ready for it.
All right, folks, hopefully you've enjoyed this episode of Rein It In. We hope to see you again next time in 2 weeks for the next episode, episode 19. We'll see you then.
Remember to subscribe, like, share, comment. Let us know what you liked. Even let us know what you didn't like. Either way, we're going to read all those comments and adjust accordingly. Thanks for listening.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click there.